Hey everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into a report from Solitron Devices, and let me tell you, their recent performance is a bit like a roller coaster, some ups, some downs, and maybe a few unexpected loops. We are looking at a Form 8K filing. This is basically an update that companies send to the Securities and Exchange Commission when something important happens that investors should know about. It's like a corporate bat signal, alerting everyone to key events. This report is dated April 4, 2025, so it is relatively recent. It gives us a snapshot of what was happening with Solitron Devices at that time. The heart of this report is about Solitron's financial health. They're giving us a sneak peek at how they did in fiscal year 2025. Let's talk bookings. Think of bookings like placing orders. In the fourth quarter of 2025, Solitron booked about $8.9 million in orders. That's a significant jump from 2025, looking at the whole year. Bookings totaled 2024. Looking at the whole year, bookings totaled 2025 because they owned microengineering for the full year. That's a big increase. It seems like business is really picking up. They even point out that the numbers are better in 2025 because they owned microengineering for the full year. Next, let's check backlog. This is the amount of orders they've received but haven't yet fulfilled. As of February 2025, their backlog was about $18.1 million, a good jump compared to $11.2 million a year earlier. So they have a good amount of work lined up. They also mention missing out on end-of-life orders, which are orders placed for products nearing the end of their production life. Missing these orders could have been a setback. Now we get to revenue, which is the money the company actually makes. Their revenue for the fourth quarter of 2025 was about $3 billion they made in the same quarter of 2024. This decrease happened because they had less work lined up or lower backlog at the beginning of the quarter and also had to fix more products called rework. Here's the bottom line. Solitron expects to report a loss of about $100,000 for the fourth quarter of 2025. This loss comes from the drop in revenue, and because they had to set aside $100,000 for inventory reserves, which is like saving money in case some of their products can't be sold. Regulation FD disclosure is a fancy way of saying they're making sure everyone gets the same information at the same time. They mention that the earlier information we spoke about is part of this regulation. The report is signed by Tim Erickson, the Chief Executive Officer at ETUSO. What's the story here? Solitron Devices had a mixed year. They booked more orders and increased their backlog, which is good. However, their revenue dipped in the last quarter, leading to a loss. This suggests they are facing some challenges in turning orders into actual sales. The increased bookings indicate growing demand, but operational issues and lower starting backlogs are hurting their immediate financial results. On the bright side, the higher backlog means they could see better revenue in future quarters, assuming they can sort out their production and rework issues. The loss for the quarter is a concern, but it seems manageable, especially if they can improve efficiency. However, risks exist. Solitron needs to effectively manage its operations to convert those bookings into revenue. If they don't, the backlog will just sit there without improving the bottom line. Also, keep an eye on those inventory reserves. If they have to keep setting aside money for unsold products, it could signal deeper problems with demand or product quality. In conclusion, Solitron Devices is at a crossroads. They've got demand, but they need to execute better to translate that demand into profits. Investors should watch closely to see if they can turn things around in the coming quarters. Thanks for watching. If you found this breakdown helpful, please like, comment, and subscribe for more corporate decoding. Until next time.